Catherine, I want to get your take on how you factored in the trade conversation to your worries about global growth.
Well, we've already seen that business sentiment has taken a hit because of the trade issues that have been on the table. And adding in the 232 on cars, I mean, we're talking about steel today, but, cars is a much bigger market. And the national security grounds for cars is also quite questionable. We've got the China issues coming up on trade. So it's very clear, if you look at both a rhetorical analysis of the statements as well as a data analysis, that business sentiment has already been hurt by the trade rhetoric. And probably now the trade actions is only going to add to that. And when business sentiment is hurt, it does translate into a change in business activities and business outlays. And that has really been the foundation of the cyclical upturn that we've seen so far, is business investment. If that's hurt, then we are setting the stage for the slowdown in growth, perhaps moving forward into 19 as opposed to 2020, which is where we have it now.
So what about it, Jim? As a practical matter, are you seeing, as an investor, are you seeing an effect on business sentiment because of all the rhetoric? Because there's been a lot of rhetoric. Let's be honest, there actually hasn't been all that much action yet on trade.
There's certainly a little bit at the margin. I don't think it's been hugely detrimental yet. I think a lot of businesses, like the rest of us, are getting used to regular volatile rhetoric coming out of Washington and response rhetoric from other parts of the globe, with little that really happens fundamentally. Now that could certainly change, and it could blow up at some point. I think people have kind of vetted the idea of some of these initial tariffs going into effect and the impact that could have on these one-off industries. I think that's been there already. So I don't think that is as big a risk right now to the global economy as is just the general rise in yields that we've experienced not only in the United States but around the globe for the last 12 to 18 months. The general slowdown in monetary money supplies, particularly in the United States, falling from over 7 about 18 months ago to 3.7% right now. The rise in currencies throughout Europe and abroad relative to the dollar, all those are slowing forces, which I think will slow down global growth, but probably more important than the trade rhetoric.